Okay, good evening, viewers. This is again Charles Kafel, and I'm here to take you through the LIFO method. In our first video, we saw how we can calculate the value of closing stock using FIFO, that is first in, first out. So allow me to take you through to the next one. And this time it's going to be the LIFO method. This is our solution. Yet, of course, when you're starting any financial statement, you start with the name of the company, what you're preparing, and the period. We've used the same question that we did when you are using FIFO. I've just changed only the method, and it is the same company. So we can add just here to get a clear view of the units. Then here, I hope that one's enough. Okay, let's start. Go through the question. The question says, Tase Juice Uganda Limited is located in downtown Kampala City, is a leading producer of fruit juice in Central Region. TJU buys a variety of fruits from Owino Market, such as oranges, pineapples, and mangoes, which are supplied directly to TJU's store. The fruits are then processed, packed in a different brands, and dispatched to shops and supermarkets. On 31st March 2019, the store ledger card showed 315 kilograms of fruits in the store, valued at 4,500 per kg. The company uses last in, first out that is LIFO method to value inventory of raw materials. The following information relates to fruits received and issued during the month of April 2019. Here, what we are emphasizing on, we want to look at the cost, because if you check in the required, they are saying prepare TJU's store ledger card or store ledger account and determine the value, Roman 1, the value of the closing stock as at 30th April 2019, 14 marks, and Roman number 2, they are talking about the direct material costs charged to production. So they have given us the data here. We have the purchases, we have the issues, and you have the unit cost, the total cost, and the units we purchased plus the units we issued out at different dates. So we can proceed by first taking the company name. It is Tasse Juice Uganda Limited. Yeah, we had made some analysis. We said we start with the name of the company, what you are preparing, then the date. That's how the title is supposed to be described. Then you have the purchases, we have the issues, we have the balances. Then we can start off. They said 31st March 2019, we had the closing stock of 350 kgs valued at 4,500. Then this one on 1st April 2019, since this one is 31st, then on 1st April, it will be our opening balance. So we go in the figure for that. We start with the years, because the year is not changing, it's only one. So we put it, we make it to be the first, followed by the month, that is April, then followed by the date, that's first. First, we said we are not buying, but these are balances for last month. Can call it balance brought down, and it is going this side. They said it is 350 kgs. So what will be the cost? You can value it from here to say cosine this times the cost. They said that they said the unit cost was 4,500. So we can value it at, sorry. Can value it at 4,500, and it will give us that amount, which will be 1575000 triple zeros. So that will be that. That will be the balance we shall be having on first. So we go to the next. We go to our table. The table says on second, we purchased quantity. We bought 300 units at 1,380,000. We said we are buying, but we are buying the units. We said the units they were 300 at 1,300,000 units at a total cost of 1,380,000. So if it is that, then what will be our unit cost? We said it's 1 million. It will be equal in this divide by, it will be the total cost divide by the number of units. Then we shall be getting our unit cost as 4,600. Then since we have purchased on second, this is on second, and these are purchases. So we have to increase our stock. When we increase our stock, you know, when you are purchasing, what you do in accounting, when the purchases are increasing, you debit them, then you credit whatever means you are using to pay for those goods. So when we say we are debiting, when they are increasing, we are debiting. So debiting meaning we are adding back to what we had. It will be this, cosine this plus what we've purchased, and it will be 650. So we increase even this one plus this to give us that total. So when we are done with that, we can go to the next transaction. The next transaction took place on 8th, and on 8th they are saying they issued out. When they issued out 400 units. We issued out 400. This is on 8th. We are issuing issues, and the units are 400 units. But here now we are saying that when we are using LIFO, it means what we've received earlier, as the word is said, last in, first out. What came in last is the one which is supposed to be taken out first. Why? And when you do so, it will bring that the goods which are already in the store, they may even expire, because when they tell you to get the differences between FIFO and LIFO, we just know that this one, it values these items at the list cost. Because you may find, if let's say we had an inflation, you may find that the recent goods we are buying, we had an inflation and the prices were high, so you may find that you are valuing them at a very high cost, which is as a result of the increment in the prices. So that's one of the challenges, and you may find out that you are overstating the value, you are over or understating the value of the closing stock. So we said, since we are using LIFO, it means what we bought last. This is the something, what we received at last is the one we are supposed to issue out first. So we are supposed to first issue out the 300, because this 300 cannot accommodate the 400. So we shall first issue out the 300, then the balance will pick it from here. So we shall first give out the 300 at a cost of this, the 4600, which will give us this, multiply it by this, and you get that. Then we'll less this one, to be cosine this minus this. So we shall be remaining with that. So when we remain with that, then we are saying that let's also reduce the cost, the total cost to that. But remember, we're issuing out 400. It means this 100 units is supposed to come as the next one to total up to the other 400 we have issued out. Then we are issuing that at the other price they gave us for the opening stock, which is 4,500. It's 4,500. So we can multiply that, we get this, multiply by this, and get that. Then we have to reduce also the balance of in units. It will be that minus this. Let's enter, and you can adjust also the total here. We say that minus this. Of course, some students may ask, how about if what we are supposed to issue, if let's say we had issued out this 300 and we find that the opening balance here was, let's say, 100 or 90, which couldn't accommodate this. They cannot give you that question. They will give you whatever method they give you. They will make sure that these units, they are there. You can't issue out something you don't have. So you keep that in mind. Don't just say that if this one, just know that there is a mistake, because when they give you something and you're using a certain formula, because if you try to divert and you deduct from let's say, because you cannot even deduct from anywhere, because the stock will not be enough. You can't issue something you don't have. So we can proceed on the next day. The next purchase happened on 13th, and we bought 500 units at 2,350,000. 2,350,000. Can put it here, 2,350,000 before we forget it. And we bought 500. These were purchases. Bought them on 13th. So that's it. We can find the unit cost equal this. It will be the total cost divided by the number of units. Press enter, you get that. Then you add just our balances. So it will be this. Since we are buying, it will be that plus this. It will give us that. Then we shall also add just our total cost to that plus this. Hope we are at par. Then we go on the next date, which is 14th. There is an issue of 350. On 14th, we issued, these are issues. We said 350. 350, is it so? We issued out 350. So if it is 350, we first see what do we purchase earlier here. We bought 500, so we are going to issue at the latest cost. So long as the item, the stock is enough to be issued out, you issue, because this is 350 and this one is 500, so we can be able to issue out that equal to this, multiply by this, get the cost. We can reduce the units here by getting that minus this. It will give you that 400 units. Then you have to also reduce the cost minus this. So hope we are getting it right. We go to the next date, that is on 20th. We bought 400 units at 1 million. Said we bought 400 units at 1,860,000. 1,860,000. We bought how many units? We bought 400 units. Bought 400 units. And these are purchases. Purchases, we bought them on 20th. I hope the date is okay. Then we divide this, the total cost divided by the number of units to get the unity cost. Then we can add just our balances here, saying cosine this plus the number of units we've purchased, the 400, it will top up to 800 units. So we also add just our total cost, that plus this. Let's enter. We go to the next one. Next one they are saying on 22nd we issued out 650. This 650 you are seeing we are issuing this is an issue on 22nd. We are issuing 650. But remember here we've purchased 400 units. It means we have to first issue out the 400 units and they get done. When we complete the 400 units, then we shall go back to the most recent. Do this, multiply by this. cosine this minus this, then it will be this minus this. We said we are giving out 650 minus what we so far we've given out. Oh, sorry, I'm supposed to put minus so far what we have given out of that, we shall have to give out the 250. But remember, this 250 is supposed to be part of this recent purchase of 500 units. But on these 500 units, we issued out already the 350. It means if we had issued if let's say we've said the 500 units minus the 350 we gave out already from that stock, we remained with 150. It means we are going to first give out that 150. This one we can remove. We put 150. So this 150 is the one we are going to first issue out, but we are issuing it out on 4,700. So it will be equal sign this times this. Then we adjust our units as this minus this. Then we also adjust our costs to cosine this minus this. But remember, we are not done yet, because this 400 and this 400, it means here we've so far given out. We've so far given out the 400 plus the 150, that is 550. Then this, it will be this 550 when you get the 650. That's what we are issuing minus the 550. Then we shall be having 100. Now this 100 units is going to be removed from the other order we had here. Remember, on this one, we removed only 100 that was deducted first. Then it means on these units, we remained with the total, what we are remaining with as in terms of units is 250. But on this 250, this 250 is part of this, the first one we received, which is the opening stock. So when we remove this, we remain with 250. Now the 250, we are removing 100. So that 100 is going to be valued at 500. To be equal sign this times this. Press enter, and you add just also these units. It will be this minus this. Then it will be remaining with 150. Equal sign this minus this. When you see that this 675, the reason as why it is coming like that, it is because of this 150. It means that 150 is the only stock that is remaining from here. So it will be the 150. If you want to prove it, you can prove it from here, and you see that what we are doing is exactly the same. Multiply it by the selling price, which was the cost price, which was 500. You'll be getting the same exact answer. So that's how it is. Hope you guys, you are not confused now. We can push through with others, and we see how we can finalize this. It is here. Then we go to the next one. The next one is We finish this 650. Then we are going on 24th. On 24th, we purchased 360. This 360 is valued at 1,728,000. It is 360 valued at 1 million. It is valued at 1,728,000. 28,000. Yeah, 360. Hope I've picked the right figure. It is 1,728,000. 1,728,000. Yeah, it's the right one. But these are purchases. They happened at what was the date? The date was on 24th. This is 24th. Then we want to know the unit cost, which is will be this, divide by this. Then we adjust our stock here by cosine this. Since we are buying, we add plus the number of units we purchased that. And we can also increase our stock from here, this plus this value here. So I don't know if you are confused, but you can keep watching this same video and you try to get to know how you can understand that. And if you don't, you see that you are not getting it, make sure you comment and you put your question in the comment section so that we can keep in touch and we sort ourselves out. So that one is done for 24th. Then we go to 25th, we issued out 260. 260, this is an issue which happened on 25th, which is issues. We issued out 250. Is it 250? Let me check again. We issued 260. It is 260, meaning this 260 is supposed to be picked from the recent purchase, which we bought on 24th. That is 360. Yes, it is there. So we can just take out the 4. It is valued at 4,800. Then get the total cost. It will be this times this. Then we get the total units, which will be this plus. Now we are lessing because we are issuing out. We are removing, stock is reducing, and we reduce that. Then cosine this minus this will give us that. So we can proceed to the next transaction that happened on 26th. We are issuing also. We are issuing 100 units. This is 26th. We have also an issue of 100 units. But remember, we are using the most recent. This one is not yet complete, so we are supposed to first finish up this one. This one we issued on the 260, meaning we remained with the 100. If it is there, if this one was remaining, like if what was remaining here was, let's say 90, we could first issue the 90, then we check on this one. Actually, it is not even this one, it is this last one, because this one still has some stock which we have not yet sold or issued out. So it will be that valued at this, which is 4,800. Then we get our, yeah, it is that. Then we can adjust this by saying equal sign this minus this 100. That's 150. That 150 is going to reflect here the value, that minus this. It will give us that. That's 670 that will be the cost. This cost is this opening stock, which was not issued out, because we have issued out all of this one, plus even what we have just received on 24th. So we go to the 27th, we are purchasing, we purchased 3. We purchased 320 at 1 million. On 27th, we purchased 320 at 1,480,000. 1,480,000. It is 1,480,000. 88. Let me check, confirm the figure. It is 1,488,000. Purchased the number of units, there were 320. 320. These are purchases. On 27th, then we want to find the unit cost. The unit cost will be this divided by this. Most of the times in the question, they give you this and this. Then when they give you, just multiply to get this. But if they give you this one and you don't have this one, you just divide. Hope you are not getting confused. Because in this, we are adding, because the stock is coming in, plus this. Then it will be equating to this plus this. That will give us that. Then we'll go to the next transaction. The next transaction happened on 28th. We still purchased 200 units at 984,000. 200 units at 984,000. We still purchased purchases at a date of on 28th. Then we want to look at what will be the unit cost. It will be this divided by this. Get that. When you've got that, we can still go ahead and adjust our totals here. Adjust the totals because we are purchasing this plus this. Then this one will be equal to this plus this. So we'll go to the last transaction. The last transaction in that month of April happened on 30th, and we issued out 300 units. This is on 30th. These are issues, and we issued out 300 units. There were 300 units. But remember, we take the recent purchase, meaning we have to first complete these 200 units, and then we call the remainder, the 100, we pick it from here. So we are going to first exhaust the 200, which is there at a cost of 4,920. Then this one will be this times this. Enter, then we get our units. It will be this, since we are issuing out, it will be this minus that. So it will give us 400. So these ones, we are going to be having this minus this. So when you have finished that, we can go to issue out, because we issued we were supposed to issue 300 units, but we had issued, we've so far given out the 200. It means it will be the 300 we are supposed to issue minus the 200 we issued out already. which will remain with 100. Now this 100 is supposed to be picked on from this. Remember here we had not issued anything. It means the only stock we are left out to be issued is supposed to be this stock we purchased on 27th and the opening stock. That is supposed to be issued at 4650 and it's supposed to be giving us a total value of this times this. That is that we can reduce the stock here by saying cosine this minus these 100 units. We shall be getting that to be cosine this minus this. Then it means this one is going to give us, this one is going to be our closing, the value for closing. This is our closing stock. So you can come here and say closing stock equals to 370 valued at 70 kgs valued at 116,89,000. So you are seeing now this one, the reason why these people, they don't like LIFO, it's because it understates the value of closing stock. You know, when you understate something, you know the implication, because this figure is supposed to be taken to the income statement. When you take it the income statement, it will reflect, because when you include it in your trading stock, because we say when you get the cost of the cost of sales, it is opening stock plus purchases minus closing stock. So when you less this small figure, it will give a high cost of sales. And when you get the high cost of sales, it means that high cost of sales is going to reduce on the net profit or on the gross profit that is supposed to be taxed. So it's not good. They don't recommend it because it gives a high value of closing stock, which makes the gross profit to be a bit low, which can make which can't be used for taxation purposes. You know, when you're taxing and you are charging that tax to something which is already reduced, and it is reduced because of the understatement of the figures within, it means you are going to be paying a less tax. So if you want to prove this, that what we did is okay, you can get that. We said the proof, we are going to get it from here. We said on this one, remember this one, we issued it out here and it got done. So the only stock that is remaining, this was the one we purchased on 27th. We issued out only 100 units. So it will be, we purchased the 320 minus the 100 units. Let me put a cosine here. It means these 220, they are still there. So how do we value them? Can just say that we are putting its value 4650. Then we try to, when we want to get this, it will be this times this. That will give you that. When you get that, remember we said that on this stock, if you check here, we only issued out the 100 and we came and issued out the 100 here. Those are the only units we removed, this and this only. Meaning we removed the 200 units, this 100 plus this 100 from this one. So it means that those units are supposed to be 350 minus the 200 units. It means we are still having, sorry, I did not put the equal sign. cosine. So we still have 150. And this 150, they are supposed to be valid at 4,700. So its value will be this times this. Then we get that. If you want to confirm, we add up, we add these two. We get here the total, because that one is supposed to be equating to this one. Cosine this plus this. Sorry, I've made a mistake here. These units, they were issued at 45, not 47. Here I had put a high figure. It was supposed to be valid at 4.45. So it means if you change this, because these units, they were valid at 4,500, not 47 as I had put. Because when you check, you just see that they are varying, they are tallying with what we've got up here as our closing stock. And that's how you do that. Then the other one, the other one, they told us of the direct cost. The other question was like the direct material costs charged to production. These ones you just add. I said you just add these issues. If they want them in units, you add these units we've issued out. If they want them in cost, but here they are saying direct material cost. So it means they want this value, not these units. The direct material cost is equating to, let's just get a sum here. Can just sum up. We say cosine, we add this plus this plus this plus this plus this plus this plus that plus the next one plus this one, and then the last one, that. Press enter, and this will be the value of the goods we've issued out. So that's it. And please, if you get challenges, make sure you ask. You will put that in a comment section below so that I can get to know how I can help you out. You can also try to make this one and we apply borders so that you can get it something a bit, which is a bit clear. I hope there it's fine. Is it fine? Yeah. Apply these borders, all borders, and you can put the whatever, the separator, so that we get to know how we've done that, and you can save. That's how it's supposed to be done. And thank you for following. Maybe I can use the same question. We do the weighted and we see the difference, because you've seen the difference here is that they don't give the same figure for closing stock. They are supposed to be different in a sense that we are using different costs. The amounts, they are the same, but the prices, they are different. That's why the total cost is different. Thank you for watching. I'm just making you guys to give you a brief reminder that you're supposed to subscribe, and whenever I put in or I upload a new video, you'll be able to watch it, and we improve our learning And that's all for today. Thank you.